yesterday, our application and work together on your own for 1-1 is no matter what happened, our accounting equation needs to stay in balance. We need to make sure that the left side equals the right side. For today's problem, what we're going to see is we still have our accounting equation, and we need to remember that the definition of an asset is anything that we own that has value. A liability is anything that we owe, and owner's equity is what is left over after we have paid off everything we owe. So it's really just the equation coming in. So when we look at our work together and on your own for 1-2, our assignment, our instructions read, for each transaction, place a plus in the appropriate column if the classification is increased, and place a minus in the appropriate column if the classification is decreased. So what we have here, we have 1, 2, 3, and 4, and these are going to be called transactions. Transactions are things that happen within the business that are going to affect its finances. Okay, so I need everyone in Applia, just to make sure we're in the right spot. You can go ahead and open up your work together and on your own. And you can get right into the work together, 1-2. So this first transaction reads, bought supplies on account. And what is going to happen in accounting is we do double entry accounting, which means anytime there's a transaction, we're going to affect two accounts, because you can't affect one account and keep your accounting equation in balance. So we have to go through and look at this transaction and break it down so we can see how it affects our accounting equation. So when I look at bought supplies on an account, one of the first thing that stands out to me is supplies. Okay, so now we have to determine, are supplies going to be an asset, a liability, or an owner's equity? Do we own it? Does it have value? Do we owe it, or is it part of the owner? And what do you think, Bryce? Got to take a guess. There's 3 of them.
Owner.
So it has the name of the owner in supplies. So the name of our owner is supplies? Okay. So that's what I said. It has to have the name of the owner in it. So it's not going to be owner's equity. So now you're left between, do you owe it or do you own it? So take a look at your notebook. Is a notebook considered supplies to you? So what would it be then?
Asset.
Why? And what? There's 2 parts to being an asset. You can't just own it. Riley?
It has value.
If you own it and you have and it has value, it is an asset. So supplies is going to be an asset to a business. When I go out and I buy toner for my printer, this increases the value of my business. Okay? Toner is expensive. You have to buy it. You need to have it in your printer. Same thing for paper. All of those items your business needs to have. So now we know that supplies is going to go up, and we just said supplies is going to be an asset. So what I'm going to do right now is I'm going to put right here under assets, I'm going to put in a plus. So you can do that. Is my accounting equation in balance? No, because I have an asset that increased. Now, the other part of that transaction is we bought it on an account. So what does account on an account means? So yesterday or Wednesday, Team Apparel delivered our headbands, our bandanas to us. Did I pay them when they dropped them off? What do you think?
Probably not.
No, I can't quite. He's giving me the bill at the time he gave me the bandanas. I don't have a checkbook that I can fill out a check and pay him. So we bought these bandanas on an account. So that means, when am I going to pay them? Right now or later? Later. So if I have to pay somebody, that means that I pay them because I owe them. So the amount of liabilities, the amount that the business owes, is it going up or down? Do I owe more to my people I'm buying from, or less?
More.
We owe more. So liabilities is going to be an increase as well. Because I owe the company that we got the bandanas from more money because I bought supplies. Bless you. Transaction number 2. Receive cash from owner as an investment. That's a transaction. Receive cash from owner as an investment. We have to have two accounts are going to be affected, and one of the accounts that I hear in there is cash. Every business has to have cash because that's how we're going to pay for things. So we have to determine, is cash an asset, a liability, or owner's equity? What do you think, Jennifer?
Asset.
Why? And? Yes. So it's the definition. We have cash. We own it. So if the business received cash, so if I receive cash, is cash going up or down? Up. So therefore, we know that our asset is going to go up. Now, the next thing that we heard is receive cash, we took care of that, from owner as an investment. So now, Bryce, do you hear the word owner in there? So what one do you think is going to be affected? Yes, exactly. Because we are actually saying the word owner within it. So within owner's equity, does the owner have more value in the business now or less? More. Okay, so what is happening is the owner has to take money out of their personal account and they have to put it into the business so the business has starting cash. You cannot have, an owner can't use his personal bank account to pay for business things. You have to keep them separate. That's an accounting concept, a business entity. So we are going to have an increase in our owner's equity. So that one is going to go up because we have more value, the owner has more value in the business. Our third transaction reads, paid cash for insurance. Okay, so the first thing that I hear within that transaction is paid cash. The other part is for insurance, so let's deal with paying cash. So Jennifer already told me cash is what type of an account, Ben? It's an asset. So if I paid cash, what is happening to cash? So cash is going to have to be decreased. So we're going to have a minus in an asset, okay? Now, the next thing that we have in there is insurance. What is insurance? Okay, is insurance an asset, a liability, and owner's equity? And just to be clear, if it doesn't say the word owner in it, which one is it not? Owner's equity. So we know now we're left to two. Okay, so we're down between an asset or a liability. Now, students like to think, I have to pay my insurance bill, so therefore it's a liability. But that's not the case. When you think about insurance, we have some people in here that drive a vehicle, right? Do you have to pay your insurance? Okay, if I have insurance on my vehicle, I pay it today. Is that insurance good for the next month or the last month? Why do we buy insurance? In case something bad happens, right? So I'm buying insurance in case something bad happens if I get in an accident. In the state of Wisconsin, it is required that you do have liability insurance on your vehicle, right? Instead of full coverage. So here's what the insurance company, you're going to say, all right, I have to pay my insurance. Was it for the month of September or is it for the month of October? Would you pay for September if nothing happened? So you always pay for insurance in advance. So if you pay your insurance bill today, that is going to cover you for the next month, 2 months, 3 months, whatever your premium is going to be. When I pay for my homeowner's insurance, I pay for a whole year. I don't pay for the last year because if I didn't need homeowner's insurance, would I pay the bill? So insurance is something that you own and it has value because if I pay my insurance bill today and next week Wednesday I get a new insurance company, I can go back to that insurance company and say, I'd like to cancel my policy, and they would issue me a refund for the value of that insurance. So insurance was always a little bit of a tricky one because students associate paying insurance with paying a bill, so therefore you owe it. But insurance is something that you own. If you wanted to, you could stop saying I don't want it, and they would have to give you a cash value back. So you own that policy. That's why in the car you have that proof of insurance that shows that's where you have your insurance through, and then they can give you a value back. So I paid cash. We know cash is going down. Do I have more insurance or less insurance? More, right? So insurance is an asset. So I have an asset going down and I have an asset going up. Does that keep my accounting equation in balance? Definitely. So that's why I didn't type in a minus right away. So right here for my assets, I'm going to do a plus and a minus because I have one going down and one going up. Transaction 4, paid cash on account. Excuse me. I hear right away paid cash. And I hope at this point, when you hear the word cash, you should associate the word cash with an asset. We own it, it has value. If I pay cash, do I have more cash or less cash? Less. Okay. So we determine that. So I know that I have an asset that's going to go down. But now I have this on an account. Okay. What does on an account mean? I'm paying for these headbands or these bandanas. Okay. So my liability, how much I owe people, is it going up or down? I owe the people that I got the bandanas from more money or less money? Less. Once I give them money, I owe them less. Because if I had a bill for $100, if I paid them $100, the amount that I owe them just went down. So I have a cash asset that's going down, and I have a liability that's going down. So I have two minuses here. We can check that answer. Yay! I got a perfect. You guys get a perfect? I hope so, because I had a perfect, so you should if you were copying me. Go ahead and try that on your own. I can't, because I'm in accounting 1 now. Because I only have a couple minutes and I got to get them going. So give me a second. Okay, accounting 1. So I want you to take a look at application 1-2 here. 1-2 is a little bit different than what we did in our work together and on your own. So for application 1-1, what we have here is we have our accounting equation going across the top. We have assets equals liabilities plus owner's equity. And then below there, we have where it says cash is an asset. Here it says supplies is an asset. In here it says our account title prepaid insurance. Remember how I explained how prepaid insurance is an asset? So here we have individual accounts. And what we do in accounting is we go through and we have accounts. So accounts give us specific information. So in my account rent, I'm going to keep track of how much money I spend on rent in the next year. That is powerful information for me. I want to know how much money I spend on advertising. If I increase my advertising, does it increase my sales? So we have different accounts that we use to track all of our money going in and out. And we have 3 assets. We have 2 liabilities. Our liabilities are accounts payable 5-Star Supply and accounts payable Riverland Company. Liabilities are always very easy to identify as accounts because it'll always say the word payable. Think about it. You only owe people you have to pay. So your definition of a liability is anything you owe, so therefore you have to pay them. So the word payable should be ding, 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 ding. I'm a liability. Now, when we talk about the account title for owner's equity, the account title for owner's equity is always going to be the name of the owner plus the word capital. The word capital with an A. How will you remember that it's an A capital? You're in accounting, so this is capital with an A instead of an O capital. Okay. So we have individual accounts. So before all we did is we just said, all right, I have an asset going up, I'm doing a plus. I have a liability going up, I'm doing a plus. Here we're actually going to go through and put in the amount that's being affected. So when I look right here, the beginning balance for every single one of these accounts is 0, meaning the business just started. They have no value in any of these accounts. The first transaction, we received $3,000 worth of cash from the owner as an investment. So if we receive cash from owner, you did before, cash is going up, right? So you will notice right here, this is number 1 right here for transaction. We have a plus 3,000 right here for cash. because cash went up. Before we just did a plus. Now we're doing a plus and the amount that the owner put in. Now we can't have one account affected without the other. We got to make sure our accounting equation is in balance. And the other thing that's being affected is right here is going to be our owner's equity. The owner invested $3,000 worth of cash in the business. So owner's equity goes up, which is why we have a plus, and then the amount that they put in is $3,000. Now this line right here that says new balance, all we do is math. If I do 0 plus 3,000, it gives me 3,000. If I do 0 and nothing, it gives me 0. 0 and nothing, 0. 0, nothing, 0. 0, nothing, 0. 0 plus 3,000, that will give me 3,000. The second transaction, let's do that one together, reads, paid cash for insurance, $1,600. So we are on transaction number 2. So we go on this line right here, transaction 2, going all the way across. On the transaction lines, you will always have just 2 accounts affected. So I'm going to pay cash for insurance. What's one account that we're going to be affecting? Riley? If I pay cash for insurance, what's an account? Nope. I'm going to back up a second. When I say account, these are what I mean by accounts. Cash, supplies, prepaid insurance, accounts payable, and capital. So if I pay cash, what account is going to be affected? Cash. I like to start with obvious. So if it says pay cash, I'm going to affect the account cash. Do I have more cash or less cash? Less. So I'm going to do a minus in cash of 1,600. What was the other thing I'm getting? I paid cash for insurance. Do you see the account for insurance? Okay, do I have more insurance or less insurance? More. So I'm going to have to put a plus in front of insurance. So I'm going to do a plus 1,600 there. Now, line 2 is done. I affected my 2 accounts. Now I have to do math. So I have to take 3,000 and I have to subtract 1,600. So what's my new balance of cash? 1,400, right? 0, 1,600.
Following students to the main office, please. Sheriff Herb, Garrett Barnes, Jason BDL, Ben Seglinski, Austin.